Hi investors and traders, as we mentioned that this video is going to be the continuation of the video where we're looking at the recent earnings. So we're just gonna jump straight because we don't want it to be a long video. This is going to be more technical analysis inclined. So we did speak about Mastercard and Visa. We mentioned that the stock have been performing okay. It's generating a lot of money in terms of profit margin. So what we are looking at here, we see that Mastercard is currently coming to a near resistance level. We saw that this is the past previous price point. So what we want to see how the stock is going to perform around this level. An ideal scenario is that the stock trades above this level, but just because this is sort of a long-term resistance level, the short-term level that we're looking at is this level. So if we see a breakout in here, then we can consider buying the stock, but keeping in mind that there's a potential overhead resistance here. So first we need to clear this resistance level, and then we need to clear this second resistance level. Then we can expect the share price of Mastercard to continue to trade higher. So this is the trading plan in terms of Mastercard. So let us look at another company. We spoke about Amazon, how disappointing it was in terms of price action, but it was not a big deal. It's just that we expected more from the stock. We noted previously that the stock was somewhere at this resistance level. We took a long position when the stock broke above this level in anticipation that the stock is going to come and trade at least to reach that level in there. We still expect that move is still in play. It's not over yet. It's just that it was a bit disappointing when the result came, because now we saw that this red candle in there, initially there was a big jump up and then the stock opened lower. Overall, we can see that the stock is creating a series of higher highs. We can see, higher lows in this case, and this is a higher high compared to that previous high. So the move upward is still very much in play. So we're gonna give the stock some time. At least at this moment, the stock is not gonna be affected by news, even though that this candle was a bit bigger red in terms of the normal volume. It was above average that volume. We're still positive that the setup can still play out, but just because we are positive doesn't mean that we're gonna ignore risk management. We have a stop loss somewhere around $99, so that if the share price fall here, then we are able to cap our loss. But we are still positive that the share price is still gonna move in a positive way. And then let us look at alphabet. You can use whichever alphabet that you want. I think most of the time we are using this alphabet here. So what you see, you can see it's a lot of these setups trying to form something like a base here. The stock is just at this resistance level, so we want to see a breakout, the stock just breaking above this level, and then we can expect the stock to come and trade somewhere around 125 130 level. But this is a promising setup. We can see in the past few weeks the stock has been under accumulation. I think people were waiting to see how the share price is going to perform, and then we can see here that there is this consolidation that is happening there. So from this consolidation, we just want to see a nice breakout here, which will be a confirmation for an upward movement. Otherwise, any breakout or any breakdown below the resistance level will be negative for the stock. Hopefully that move does not play out. So we will be looking at this position. I just want to see how the other alphabet look like, if they have the same pattern. Okay, we see the very same pattern in here, so it doesn't matter which class of the alphabet shares you are using. We spoke about Microsoft coming out with an incredible result, and the stock just shot up. So you can see we had this nice consolidation happening here. The result came out, we got a breakout with an above average volume. The problem at the moment for us is that the stock is just 7% above this breakout level. So now if you buy this stock and we need to set a stop loss inside this range, it's going to give us a wider stop level. So it's better for us to wait to see how this is going to perform. Maybe there could be a breakout retest. If the stock pulls back to this previous breakout level, then we can have a limit order buying here. If it does that, obviously we expect it to come back to this level here, then we can have another buy stop order here so that we take a position. But as things stands, we don't have a position on Microsoft. I mean, we're never gonna be able to catch all these companies, so we're gonna miss some of them, and then we can only plan how we're gonna play the next potential setup if and when it comes. Then we spoke about Meta platforms coming with incredible results as well. Here we do have a position. We've been having a position for a while now. I think we bought Meta platform somewhere around, but our position is up about 70%. So I don't really remember exactly where we bought. We probably bought at this breakout level, but you can see there was the breakout retest, and then Meta platforms, it came back to break above this 190. So this is a similar move that we would like to see from Microsoft. And then you can see there was this resistance level here, potential resistance level that we noted. We see the stock, it's consolidated a bit here before it broke above on those good news. So you see there's a nice breakout to 240. It was accompanied by that decent volume here. So we're still in this position. We keep on inching our stop. Like I said, I think we bought just below 170, but now our stop loss is around 210. So as the share price move up, we also keep on following it with our stop loss. So our initial position is already in profit. We've already sold some of the stock to lock in some of those gains and used the money to take or to establish positions in other companies. So overall, we're excited about Meta platforms. And we spoke about Coca-Cola. We mentioned that it was trading near its highs. You can see it is at this level. So in terms of price action, it's not the most exciting company. So it is not a company that we can consider at this moment for trading purposes, unless the stock trade above this level, because that will be a breakout from something that looks like almost 12 months consolidation level there. Well, it's not a proper consolidation because you can see there was that dip that happened in there. Otherwise, we're not really expecting the price of Coca-Cola to come back to this level, but anything is possible in the stock market. So this is a company that you can consider for investment purposes. By investment, we mean trying to value the company to see whether it is cheap or expensive, and buying it for dividend purposes, not for trading purposes. And then there's a lot of other companies. We mentioned that in the upcoming week, there's going to be SoFi, Uber, AMD, Qualcomm, Apple, Shopify. It's going to be a lot of companies that will be coming with earnings. So we can start to plan how we're going to play some of those setups. So firstly, we're going to look at Apple, which is a giant. We mentioned that we have a position on Apple. We've had this position for a while now, so we are excited with our Apple position, right? Not so much has been happening here. We can see that the stock went up before it started to consolidate, moving sideways for a while now. So what we want to see Apple out of this range. Ideally, we want to see Apple trading above this range. That is the only exciting move that we want to see happening there. We definitely don't want to see Apple pulling back to this level here, to this support level. So why do we have a position even though the stock is trading in a range? Just because the stock is trading in a range does not mean that there can't be any trading opportunities. We've already established that the stock is trading between support and resistance in here. So we saw Apple, it found support just late 2022, early 23. So it started to move upwards here. It showed signs of strength. So that is when we initiated our long position here, and then it consolidated here a bit with this breakout. That was another time to add into this stock. So you can see there's always been those consolidation level. Our recent buy was when it broke this level, even though now it's closer to this resistance level, but it wouldn't be much of a harm for us to took that position. So we bought here. That was our first buy. Our second buy was here, and our recent buy for this week, it was somewhere around this level. So we have bought Apple 3 times since it reach that bottom of this range, or the support level of this range. So like I said, the only move that will excite us is to see Apple trading above this level, because that will be a nice continuation there. While it's possible to trade a stock that is trading in a range, it's preferable that we trade a company that is moving up in terms, or that is trending up. But we will see how the stock is going to perform when those results they come out. So yeah, that is all that we can say with regards to Apple. We mentioned that we have a position on AMD. We made the video where we're looking at the different semiconductor companies. AMD was one of them. We spoke about this breakout here. So you see, we don't always get a breakout retest, but we bought AMD at this breakout, then it started to pull back. So now it has found a support here. Ideally, we would have wanted to see this volume above this moving average, but that is where it is at. We can still buy more of AMD here in anticipation that the share price is gonna go up. But for those people that don't want to add into a loss, and it is not something that we recommend, we can wait to see if AMD breaks above this level. So for the sake of earnings, we're not gonna do anything at this moment. We're just gonna have a buy stop order here, so that if the stock breaks above this level, our trade is triggered. But keeping in mind that depending on how the results are gonna be, it's possible that the stock can gap up, so then we can miss a decent entry price in here. So for us, I think it's best that we just leave our initial position as it is, unless if the stock trade up and then it consolidate around this level, then we can consider having that buy stop order. But otherwise, in terms of technical setup, that is a decent technical setup that we see there. And then we spoke about Starbucks. It's another company that does not always have exciting price action, but you can see that it has been moving up nicely, broke above this level on decent volume. So that is a good buy signal or trigger for buy signal, but it is a setup that we have missed. We did not see this one. It happens, we're never gonna get all those buy signals. The stock is trading at $114 per share. So it is one of those companies. You can see that it has been paying dividends in the previous quarters. So looking at the last 4 earnings, we see that in May, the earnings it did not beat the expectation. But the thing with the US expectations is just guesswork. The fact is that how the company is actually performing. So we can see that it had 0.60 cent earnings per share, and then around when was this was in August, the earnings increased again. In November, the earnings continued to increase, and then the earnings declined. But now when you look at the value of the earnings, because even though they declined, it was 75 cents US cents, but you look at previously, it was 81 cents. So it is just a slight decline, not much of a big deal. So now we're going to see how much earnings that they're going to come up with. So based on the previous 75 cent earnings, at least we can see maybe say 80 cent earnings there. Those will be good result. We can already see that the estimated is 65 cent, but this is just pure guesswork. The number that we're interested in is the number that is coming from the company itself, because that is a fact. So hopefully it is going to be above 80 cent, and then it will show that the company is increasing its profitability per share. Otherwise, again, we mentioned that this was a nice breakout accompanied by decent volume here. So we'll be paying attention there. Maybe if there could be a pullback to this level, then we can consider buying a Starbucks. But if it does not happen, it's not a big deal. We're never gonna have a position in all of these performing companies. We spoke about Datadog. We said that the stock is already behaving like a dog because it keeps on falling. You can see that it has just been on a downward trend. the earnings previously were okay, they were green, so we're going to see how those earnings are gonna look like. But if the earnings they come here, they are negative, then we won't be surprised to see the stock breaking lower. But obviously the stock can still break above this level and trade up. It's just that there are too many companies that have decent setup. We're not gonna spend time looking at companies that are not performing well. We're just gonna focus on concentrating our capital in good performing companies, right? So what else? We spoke about DraftKings. We mentioned that we have a position. We are happy with that position. So there's not so much that we know fundamentally when it comes to DraftKings. What we know is technical setup. We can see that the stock, it formed something that looks like a cup and handle pattern. We know that this is one of the profitable patterns. We've mentioned in the past that patterns are subjective, so you see what you see. Whether you see a cup and handle, another person could be seeing another thing. So we first bought DraftKings when it broke above this little consolidation level here. At that time it was still below, or it was around $20 per share. And then we saw that again it traded above this level, and it managed to stay above the neckline of that handle. So at this moment we do have this position. The past 3 weeks there has been a consolidation, but earnings are coming next week. If the earnings are negative, then the price movement could be below, but if the earnings are positive, then we can see there's a lot of leeway, because the next potential resistance level is somewhere around $45 per share. So there's going to be a nice move, even if it can just go to $40 per share. That will be an easily 100% move. No, we are not saying that the stock is going to go up 100%. We are simply saying that there's just enough room for the stock to shoot up. And since we have a position, we have vested interest in this stock, we would like to see that position play out. So like I said, this is pure technical play. We don't know anything fundamental, and you can see that in terms of technical analysis, things are simple. You just see something that looks like a cup and handle, and then you say, okay, fine, I'm gonna buy this company because of that, and then expecting the share price to move up. It's not like fundamental analysis where you have to dig deeper, talk about management, talk about the revenue, all those kinds of things. They are important, but for us at this moment, they don't have any effect. They have an effect on the company and the stock, but for decision making, they are not so important for us. Okay, and then there's Vertex Pharma, one of the stock that have been performing okay in the past. You can see that the stock has just been on a nice upward move. So it broke above this level in the past week, and it's still continuing to trade higher. So some pharmaceutical companies, they have been performing well, so we are not surprised with this Vertex Pharma. It's one of the best performing companies. So I think that is all that we want to cover for today. Fourth, there's not so much exciting. You can see the stock is pretty much not doing anything exciting. And then there's Carvana. We saw that in terms of fundamental analysis, the business is just as good as that. You can see the share price has been moving up. This slight rally did not really help much. So we're not expecting anything to come. You can see the stock has been burning cash since November 2021. We're not expecting anything new. If the results are indeed bearish, we won't be surprised to see the stock coming to test this $3 level in there. So there's nothing exciting for us. And then lastly, let us look at SoFi Technologies. So this is another company again. It may or may not have bottomed here. So if it has bottomed, then that would be nice. So it's trading at this level. We already saw with the moving averages, the stock is trading above key moving average. So the best thing that can happen to the stock is that they come with positive result that can push the price higher. But there's this resistance level that it needs to clear. It also needs to clear this resistance level. So if it trades above $8 per share, then there might be some nice leeway for the share price to go up. But then again, there are plenty of other companies that are performing better. Also, the stock is trading below $15 per share. We don't hold any stock that is trading below $15 per share. You look at the volume is there is a bit of liquidity, but there are better performing companies above the $15 mark, so it is not something that we are interested in. So that's it for today. We hope that this video was insightful. If you did find value in it, please make sure that you smash the like button, and if you haven't subscribed, please consider subscribing. We will see you in the next video.